Hey guys, it's me, Vienna, your insurance exam teacher. I'm going to give you some information that's going to help you pass your insurance exam. So this topic is one that a lot of people get confused on the exam and that they tend to get wrong. Now there's 4 parts to this specific topic, and I'm going to show you how to remember it quickly and easily, and when you sit down and take your test, you're going to be like, I got this. Anyways, this is what we're going to do. So number 1, the features of an insurance contract are not the elements. People get those confused. Go study your elements and not the features. Make sure you know that they're separate and what they are, because this is what messes people up and they tend to lose points on the exam because they don't know that and they confuse that subject. So this question's about the features. Go study your elements. Now the elements, that is what makes your contract. You need to have your elements in order to have a contract, period. But now how do we describe a contract? We describe them with the features. Number 1, an insurance contract is a contract of adhesion. I adhere, I say yes, I the customer, the client says yes, sir, to the insurance company, because the contract of adhesion means it has one author, which is the company. They write it, they set the rules for us. We, the customer, decide, yes, I agree. I adhere when I pay my consideration. This is another tip. Consideration equals money in the insurance contract, in the insurance world, right? I, the customer, pay my consideration each month, pay my money, or if it's bi-monthly, quarterly, whatever, however you decide to pay your contract, right? But whatever, I pay my consideration. That is my value that I'm giving the company. They are promising that they're going to pay the death benefit or a payout or whatever. They're going to make that payment when it's their turn to make the payment. That is their consideration. That is the contract of adhesion. I adhere, I, the client, adhere to what the company says, because there's one author to this contract. The company made the contract, the company wrote it. So whenever you go to court, let's say that you have a client who says, I know that I can see this specific bit of information, interpret it like this, but it really means that, or this is what the company meant, this is how I interpret it, and both interpretations make sense. Now, the courts are going to side with the customer always, because that is unclear language in a contract. So it's just a big no-no. The next one, the number 2 feature that I'm going to talk about is aleatory. And every time you say the word aleatory, I want you to do this, like 2 scales that are totally uneven, because a contract, a life insurance contract, is a legal bet. As ugly as it sounds, they're betting on our lives. That's what it is. And if we're not looking at the situation, we're looking at money. Who ends up at the end of the day with more money? That is what we're looking at. So let's say that you have a customer sign a contract. He's going to pay $100 a month for $100,000 in coverage, and he dies 4 months later. The company got $400, but they're going to pay out to the beneficiary $100,000. At the end of the day, the company lost that bet. They lost $100,000 and they only made $400 off of that deal. But let's flip the script, and let's say it's a 5-year term policy where the customer's paying paying $100 a month. Didn't pass away, policy expired, they didn't get their money back. Now the company made $1,200 off of that client for 5 years, and they paid the client or the beneficiary nothing. They pure profited that. So that's number 2, your aleatory, unequal exchange elements. So every time you hear that word, aleatory, unequal exchange. So 3rd feature that I'm going to talk about, unilateral. So unilateral, uno, one party can decide to leave this contract. Only one party is legally bound to anything in the contract. The customer can say no thank you and leave. So one party can go, right? The customer can call the company, be like, I'm done with this policy, I want to cancel my policy. The company cannot get out of that policy or cancel this policy if the customer is paying, right? They cannot cancel the policy unless they can prove that the customer is committing some kind of an illegal activity or some kind of fraud with that policy, right? So that would be that. And the last one is conditional contract. An insurance contract is conditional, so which means that the customer has to meet certain conditions, and so does the insurance company, in order for the contract to be legal. So your hand signal for that is a handshake. So conditions met, we're going into an agreement. There are certain conditions that must be met, so it's your handshake. Okay, guys, so if you want tips like this, study techniques like this, testing strategies to help you pass the life and health insurance exam, just like the ones that I showed you in this video, go ahead and follow me, hit the word interested, DM me. I offer one-on-one tutoring sessions, and I also have group tutoring sessions where you'll get to meet with me and others who are also taking the test 4 times a week. It's a 2-week course. In 2 weeks, I'm going to get you everything you need in order to pass the life insurance exam. And like I said, follow me, DM me, and that way when you take the test, after you study with me, if you give me those 2 weeks and study and dedicate that time to it, promise you, you're going to sit down in that test, be like, I got this, and you're going to pass. So follow me, DM me, ask me questions in the comments, and reach out to me. Also, check out the link in my profile. A website is coming. You'll be able to get your testing strategies, all of that on my website also. So check that out too.